Hi everyone, Don Singletary. Today we're going to talk about a very important topic, and that is your trade selection. The only thing that separates you from other traders is what happens between your ears. And I have to tell you, 80 to 90% of day traders won't last a year. So you really don't want to be doing what most other people are doing. And today we're going to talk about why that happens and how it is. Most people think there are only two kinds of trades, the winners and losers. And they have a simple idea that just learning to identify winning trades is all you need to do. They believe this because it is either what they want to believe or it's what they've been taught. And that's the subject of today's video. Of course, you start off thinking all the trades you place can be winners. Otherwise, you wouldn't be sending the trade order. As you'll find out when you practice trade and then advance to real money trades, very soon you'll realize that winning rates are somewhere between 50 and 60% for most traders if they've done some serious study. In this video, I'll use 50-50 just to keep it real. If you're a beginner, I've prepared a set of 4 videos to explain all the basics A to Z for you. These are grouped in a playlist, and there's a link in the text below this video where you can find them. As you'll see, I use candlestick charting and a popular MACD trade signal indicator in most of my examples while trading the NASDAQ100 Micro Emini. Now, the reason I use this setup consistently is so that for beginners, it's much easier to learn if you're not switching around from one type of trading to another during the examples. We're going to talk about managing the losers and winners in a moment. Let's say out of every 100 possible trades you look at, you have 5 losers, 5 winners. This means about 90 times or 90% of the time, you're going to be saying no. I've heard the old adage that successful people spend a great deal of their time saying no to ideas and propositions that they come across. Well, this group of trades right here, this 90%, they're going to tie in with what the number one rule in trading is, and that is preservation of capital. By saying no, you're going to say no to a lot of emotions that don't work in trading, like hope and fear and greed and all of those things. So a great deal of the time, and this is a challenge when you're learning to trade, a great deal of the time you're just going to be simply saying no and waiting for the right proposition to come along that you believe has the potential to be a winner. Now, a trade, just because you pick it, is neither a winner or a loser. It's only an imaginary thing. But the moment you send the trade, it becomes real. And when you send that trade, you're going to have one of two jobs immediately. Either you're going to be protecting profits or limiting losses. So let's talk about what are profits and what are losses, because it's a relative term when you say limit something. Obviously, if you have a cutoff on your losses per trade of 25 or 50 bucks or whatever it happens to be, that would be an ultimate cutoff to be able to keep you from allowing a bad trade to ruin and dip into chipping away at your account balance. And to protect profits, if you try to protect too small of a profit, you won't be able to let the trade go far enough. Now, it seems like a riddle that's almost impossible to answer. But over time with experience, and this is why I urge you to please practice trade before you use real money in this, because as soon as you put that trade on, it's either going to be a winner or a loser, at least for a short time right away. I mean, that's what you signed up for. Now, during a trade, you're going to have to decide by watching what's happening in the market and seeing what the volatility is. If you have a target and you want to make $100 on a trade and you're only trading one contract, you may look at the market and decide that it's just not going to be possible, so you lower your target to 50 or 25 or whatever you think it's going to bear that day. But remember, the market doesn't care what your target is. You have to let the market tell you what might be possible in the context of the volatility of the day. You might have had a target to open a trade and make $80, and in a few minutes your trade is up $40 or $45. And it's okay. You're going to have to make a decision on the fly. You may say, okay, I don't think $80 is in the market for me today on this trade, so I'll take the 45, thank you very much, and move on. And you may find yourself next time in a position of having to take a $25 or $30 or $40 loss and saying, okay, I have to limit my losses because I have to keep the profits greater than the losses. And if you don't learn to limit the losses, you won't be able to make these decisions on the fly. So when you practice trading, these are the things it's most important to keep in your mind. Now, it is different trading real money, the emotions, than it is to practice in a trading ledger. But the more you do it, the more you'll be able to make these decisions on the fly. Just jumping into the market when you haven't thought about these things and considered them and seen what the consequences can bring you in terms of your account balance, you won't know how to handle these decisions. Now, one of his sayings that goes along from trader to trader every now and then is meant to be funny, but it really isn't. It's saying when you start off and you don't have a lot of experience and you lose a lot of trades in the process of learning, that you're paying tuition. Well, I'm telling you that all these things, studying your risk-reward target in the context of the market of the day, is it a trade? Are you being patient enough to wait for the right opportunity? And do you understand the number one job is preserving your account balance? You have to practice all of these things or else you will wind up paying a great deal of tuition. I'm not saying these things may happen to you or that some of them will happen. They will all happen to you while you're trading. So make it a point right now to understand when you practice trade, it's not just a matter of trying to pick a winning trade and your job is done. Actually, the tough part of trading begins the moment you send that trade and how you manage that trade in the context of the volatility of the day, your account balance, your reward risk targets, and we always try for a minimum of 2 to 1 on that. All these things come together to comprise what we call your experience. And I wish you a lot of luck. I hope every day is a payday for you. I really, really do. In my book, I have 2 chapters. One addresses a lot of the details of how you can practice trade and what mindset you want to be in. The other is a psychology of trading chapter, which also talks about some ways that your mind can try to trick you. We human beings are very hardwired in DNA to look for patterns, so much so that sometimes we see them when they're not really there. There's a lot to learn in trading, but remember, your hard work will pay off because you're learning a skill that's going to pay you for the rest of your life. This is Don Singletary. You'll find a link below to my book and also to the 4 training videos I talked about earlier. I wish you a happy new year, and I'll see you next time.